Hey everyone, welcome back to the channel. So in this video, we're going to be looking at the HEX price as well as its 20-week moving average and how far extended can it go. So we're going to be looking at the HEX price extension from its 20-week moving average. Now the reason that the 20-week moving average is significant, not only in HEX, but in all markets, is because it serves as a sort of distinguishing curve where beneath it usually sentiment is very bullish and above it beneath it sentiment is usually very bearish and above it sentiment is usually very bullish. So it just came to mind that I should probably give you an example here with Bitcoin. So we all know Bitcoin, right? And we see that it did not, right? It was generally very bearish when it's below its 20-week moving average. When it's above it, people get very bullish. And then recently, last September or so, was when we actually decisively held it as support, right? And that was around the 10K region. And from there, from that support, we went ahead and blasted off to about 60K where we're at now. And we actually haven't tested it since. So again, in Bitcoin, in the S&P, Tesla stock, HEX, right? The 20-week moving average is simply a universal tool, another tool in your toolbox that you can use, whether to gauge what sentiment is and potentially where we're going next. Okay, so with that said, with the background on the 20-week moving average explained a little bit better, let's actually look at our analysis. Okay, so I went ahead and plotted price here in green, the good old HEX price we know and love. This chart is basically ingrained in my brain at this point. And then we have the 20-week moving average here in pink. Okay, so as you can see, beneath the 20-week moving average were absolutely amazing regions where you could have been accumulating HEX at killer prices. Okay, now back here obviously was a better time to buy, but keep in mind the 20-week moving average only starts plotting data once we have 20 weeks of data to plot. And so this was that point right here. And we see here the price extension above the 20-week moving average. Okay, so how far extended have we gotten in the past? Well, over here at the pinnacle, this was our May 2020 local top around the half penny region. You see that we reached an overvaluation of about 8.5. So price was at the time 8.5 times higher than the value of its 20-week moving average. And then we came down to the moving average, broke beneath it. The rest is history, right? So where are we now? We are about 2.2x overvalued, or not overvalued, we're 2.2x extended from the 20-week moving average at this point in time. Now keep in mind that the 20-week moving average is moving up every single day. So as long as price remains above it, then the 20-week moving average will keep moving up, and any level of overvaluation here from that 20-week moving average will be a higher price versus the dollar. So keep that in mind. And so let's say, what if we were to reach this previous historical level of price extension from the 20-week moving average, 8.5x, right? Where would that put us now? So all we really have to do is multiply the current value of the 20-week moving average and multiply it by 8.5. Okay, so what is the 20-week moving average today? About 0.009. Okay, so let's just put that in over here, equals 0.009. And let's say we were to be 8.5x overvalued from that level like we've seen in the past. That would put us at around a 7.5 cent HEX. I don't know if you can actually see that value right here, but it's 7.65 pennies. Okay, so if we were to reach this level of overvaluation tomorrow, just a straight shot up, which is very unlikely, we just reached it in a day, but who knows, right? Anything can happen. We've seen similar things in the past. So if we were to reach it tomorrow, then that would put us at about a 7.6 cent HEX. And like I said, the 20-week moving average is moving up every single day. So technically, the longer we hold the 20-week moving average as support right along it, and that number keeps going up, then theoretically speaking, we could reach higher levels than 7.6 cents because you'd be multiplying 8.5 by a higher number, right? And so, enjoy this chart. We don't have much data on the 20-week moving average. It's a relatively new coin, but we do have, again, these distinct regions of accumulation. It's clear in retrospect that these were amazing regions to be accumulating HEX. And I know you can't do traditional technical analysis on a chart like this, but if you do notice, we're forming we're forming lower highs here on the price extension up until recently, where we broke this high over here. So we had, you could call this, I guess, a double, triple bottom. So we had this sort of bottoming zone that corresponds to when we found support here on the 20-week moving average. And at this point in time now, we've actually formed a higher extension from it than we did over here. So this is the ratio of price to the pink curve is higher here than it was here. So you could argue that we've sort of reversed the trend, so to speak, on this price extension, and that we might be seeing an uptrend on here, which is very bullish. Right now, none of this is guaranteed, obviously. We could come back down. Keep in mind that if price were just to go sideways from here, this extension chart would actually go down, because like we said before, the 20-week moving average is moving up every single day. So that's the video. Let me know in the comments whether you think we can reach these levels of price extension from the 20-week again. If so, do you think we'll reach it this May, or are we going to see another summer bubble, another DeFi HEX bubble? Would be amazing, obviously. I'd love to hear your thoughts. And yeah, with that said, I appreciate you watching. Thank you so much for joining this journey here in crypto. It's a wild ride, especially this year. And yeah, subscribe if you're new. Like the content if you got value from it. As always, thank you for watching, and I'll see you in the next video. Bye-bye.